Auditor General.
Thank you, Chair. The issue remains outstanding because we have not received journal vouchers correcting the misstatement, and we are yet to audit the financial statements of 2025-2026 financial year to confirm the action taken to correct this misstatement. Thank you, Chair.
Now, Governor, help us understand. These financial statements were done on 30th of June 2025. How can you have unreported trade payables of 1st July 2024? How does that arise? Maybe help us understand, because as at the closure of that financial year, you cannot be saying that there were unreported trade payables as at 1st July 2024.
Chair, I request that you allow me to request the CEC Finance to give that explanation.
Okay.
Through the Chair.
Thank you, Chair. As you can notice that 1st July of 2024 was the beginning of the financial year. So when you look at it critically, when we were casting this, we realized that as part of the tallying of the pending bills that were forwarded, this is an amount that ought to have been captured. So when we came to the end of the financial year, we noticed that the difference between what is in the statement of cash flow and the statement of financial position differs by this much, and we could attach a list of the pending bills that ought to be used to support this. So our discussion with the auditor is that to reflect a proper position of the payables, which is really the pending bills, we adjust it in the June 2026 financial statements, which is something we kept in view and we are currently capturing. Thank you.
This is not a simple JV or reconciliation matter, Governor. This is a matter of recognition of debt. And there's no way you can close a year, then decide that your debt of prior years, which was not reported, and then you bring it on board. We had an entity here, I think it was Wajir, which did the same thing, brought in 1.4 billion of debt that did not exist before. And there was no process, there was no methodology for its recognition. And I think, members, we dealt with that. So what assurance do we have that this 278 million is not manufactured debt? Because if it's not in the financial statement, and then it suddenly comes up, then there needs to be another process of recognizing it beyond just raising journal vouchers. Auditor General, can you give us an assurance, because that's your duty, that this 278 from where you sit, you can see it, and it is not manufactured, cooked debt?
Thank you, Chair. This amount, we cannot confirm whether relates to commitments by the county, because we have not seen the breakdown, and we needed to have this breakdown so that we could do in-depth audit of the transactions and confirm the accuracy and the validity of the payables. So we cannot confirm at the moment unless we see the schedule and we carry out in-depth audit of the balances. Thank you, Chair.
I thought, Chair, the CEC has said that that schedule is available and you can show what this 278 million stands for. Is that what you indicated?
Yes, what I said, thank you, Chair, is that this reconciliation actually can be obtained because it relates to pending bills, and our figure of pending bills, the reason...
See. Yes, for us to be productive with time.
Okay.
The audit query says an unreconciled variance of 278 million. Even if the governor is not the numbers person, the numbers person should have provided that reconciliation. And then that would partially, satisfy the committee. Is there any reference to a reconciliation schedule? Any reference to an appendix? So that we know the 278 million, what is it made of? Are they trade payables? Are they staff payables? Are they KRA? Are they pensions? What are they? We have no visibility.
Thank you, Chair. This actually, we have a reconciliation. I'm just asking my team to extract through the governor. Largely, these are three main items. We have items that were not there initially from our pension funds and other payments or pending bills which was still being taken through a process of audit. So allow us to just retrieve that and share to this committee, Chair.
So there are even staff payables there?
These are all debts to the pension funds that were historically there but had not been.
Of course, you'll break them down as staff payables, isn't
Yes.
it?
Yes.
And if you go to note 32, staff payables is zero. Zero. Note 32. So how do we get the assurance that your financial statements present a true and fair picture of the enterprise, but particularly around debt? Around debt, because that's a significant matter. You can't say that all of a sudden you have just realized that you owed some people 278 million from 2024. I don't know, Governor, does this bother you? If the total stock of debt keeps changing every other financial year, is it a matter of concern?
Yes, it's a matter of concern, Chair. However, we know for a fact that, I think if you just allowed us to get the schedule, we can be able to get the schedule, because even pending bills, they normally go through processes. You know, sometimes you have some that have not been cleared, some that have been cleared. This pension, the outstanding pension payments, you know, we get updated by the various pension firms that we owe them money. So it's something that we should be able to have recognized, or provided the schedule. But as the CEC says, we can actually provide that. It's a matter of concern, yes, but we can be able to provide that.
Yeah, just remember it's a 1 year, because in your response you're talking of unreported trade payables as at 1st July 2024.
Yeah.
Yeah. So if you are not worried that you have debt older than 1 year which has not been recognized, then you have a serious problem when it comes to debt management. But let me allow my colleagues to put in the question. Or does he want to provide the reconciliation now to guide further questions?
In the course of this, Chair, we'll be able to get that document.
Yeah, but remember, the reconciliation was requested for by the Auditor General at the time of audit. At the time of audit. Remember, we adopted this report as is. And so the position of the Senate is that 278 million is unexplained debt. And I thought you'd use this opportunity to change that position. As things stand, we don't seem to have any explanation to the contrary.
Chair, just allow me so that maybe I'm clear, is that the correct position of our debt is 782 million, which is accurately captured in the trade and payables balance. The difference arises from when now you're moving to the actual cash flow, which means the cash outflows. The cash outflows in this case indicates 504 million as actual cash as an increase in terms of payables. So the difference, the reconciliation is between what we've shown in the cash flow and in the statement of financial position. But we've captured the trade payables position accurately. So that's...
No, you haven't. Note 40 and note 32 must talk to each other, isn't it?
Sure.
So, can you tell us how the two are talking? One is 700, the other one is 500.
Okay, Chair, allow me just to retrieve
No,
the financial statement.
it's your clarity that we go to note 40, which is what you're explaining, and note 32, then they'll talk to each other. Can you demonstrate that? How the two are talking to each other?
Yeah, sure. Just let me just get the copy of the financial statements, Chair.
Chair, looking at, the true accurate position of an entity is in financial statement. The fact that, Governor, in note number 32 and number 40, you have not disclosed anything on employment payables. in Nandi County. So, Governor, if this 278 can be traced to somewhere, which your CC is saying, and which you didn't provide as per the Public Audit Act, what assurance are you giving us that, and I don't know, Chair, because the procedure of Parliament is you must table a schedule, I don't know how we'll rely it, this 278 remains as a variance and as manufactured as is, because it is like you are walking in the street and somebody tells you, you know you owe me 100,000. Then you say, okay, I owe you 100,000, let me add in my liabilities. So, Governor, what assurance are you giving us that this was not a manufactured amount, and where is the schedule? And if it is there, I thought the OAG should have seen that document, because Chair, section, is it 34, 30, 32, and 35 Public Audit Act, it's an offense to deny during the audit period. And Chair, all of us know that audit is a process, it's not an event. By the time from first meeting, management meeting, issues that have been flagged is there. And Chair, maybe in conclusion, sorry for taking long, even Governor, if you look at the prior year matters, in the previous financial year, this matter was also raised by the OAG. So, Governor, what is the assurity that these 278 million plus can be pinpointed to a particular debt or trade payables before the county entity? Chair, I yield back.
Okay, I think it's the same question we've been asking consistently. We had given you an opportunity to relate Note 40 and Note 32 because you're using that as your defense. Please proceed.
Okay. Well, thank you, Chair, through the Governor. On page 35, Chair, of the financial statements, trade and other payables, as I said, we've correctly disclosed the 782,535,000 under trade and other payables. Note 32, that is page 72 of the financial statements, is the same figure, Chair, only that this hasn't still been disaggregated into the various components.
What figure is it?
782,535,000.
On page?
That is page 72. That is now Note 32.
No, Note 32 is okay. So go to Note 40.
So now you go to Note 40. This is what we call cash generated from operations. That is where the variance, Chair, arises, where we're showing the 504 million being increase in payables, which is what we said there's a reconciliation between what we've shown on the face of the financial statements and increase in the payables.
So you cannot say the financial statements are accurate because the 504 is a movement in payables for the year, isn't it?
It's a movement, yes.
So if it's a movement, if the two are to talk to each other, then you ought to have had some opening balance from prior year.
Yes, Chair.
So that the movement plus the opening balance then can account for the 782.
Yes, Chair, because you remember we adopted the accrual the first time, this time round. That's why when you look at
No. We have seen other counties disclosing opening balances.
Yes, you're right, Chair. We ought to have shown the previous pending bills, even when we're reporting in cash. But in this case, we did purely cash basis, and that is why the adjustment arises. And in what the Governor read is not.
that is not the explanation, CEC. Yeah. We might be fishermen and farmers here, but we have had 46 other counties here, and we have had the Auditor General. That cannot be your explanation. This is just, perhaps let's even find out who prepared these financial statements, because it is an element of professional negligence. I don't know how material that disclosure is, Auditor General. Is it, because in the past under cash, the one that is alluding to, pending bills were not brought into the financial statements. It was just a disclosure, isn't it? But now they are part of the financials. So is it a material misstatement if the opening balances or if the numbers are not flowing as raised by your query?
Thank you, Chair. The balance is material based on our threshold for that year. Thank you, Chair.
So it's a material disclosure?
Yes.
It's not a simple bookkeeping issue?
Correct, Chair.
Is Makto present, the head of financial reporting unit?
Yes.
Yeah. And is Priska Jepchirchir present? I can see there's an ISPAC number there. Priska Jepchirchir. So you are two members of the Institute of Certified Public Accountants of Kenya, and you have committed what I would call a very rudimentary professional error. But the question is whether it's an error or the entity is manufacturing pending bills. I think that was a question we were asking ourselves earlier, whether it's a professional error or it is an attempt to create debt without clear accountability. And Governor, if you would have provided even that schedule of 278, we would have said that that is a real debt that exists. But 278 cannot be an accounting error. I don't think if we made it an accounting error, it will be a slap on the wrist.
Chair, if you can allow us to, even as we continue proceeding with the session, to ask them to be able to retrieve, that should be able to suffice.
You'll soon realize how material that error is going to be on subsequent matters before us. Because he alluded to the fact that the 278 could contain pension contributions and staff payables. And so if we can't establish the facts on this first issue, there are about 3 or 4 issues that will not be able to properly resolve. Now, members, do we tie this to the other issues or we still?
Yeah, Chair, my proposal is we tie up with the long outstanding trade and other payables because it makes reference to note number 32 on the aging analysis and the issue of trade and other payables before you make a ruling in regard to 278,221,031.
Okay, I think that's fair because it's the same figure quoted. It's a 782 million.
Yes.
Yeah. So let's just deal with note 32 to its final conclusion. Auditor General, let's go to the specifics of trade and other payables. That should be number 5 under the opinion.
Thank you, Chair. Long outstanding trade and other payables. The statement of financial position reflects trade and other payables balance of Kenya shillings 782,535,628 Kenya shillings, as disclosed in Note 32 to the financial statements. However, examination of the aging analysis revealed that a total of Kenya shillings 193,227,263 and Kenya shillings 145,328,500 Kenya shillings and Kenya shillings 108,858,915 had been outstanding for 1 to 2 years, 2 to 3 years, and over 3 years respectively, all totaling to Kenya shillings 447,408,678. In addition, records provided revealed that the balance was not supported with creditors' movement schedule. In the circumstances, the accuracy, existence, and completeness of the long outstanding trade and other payables balance of Kenya shillings 447,408,678 could not be confirmed. Thank you, Chair.
Okay, Governor, just point us to the page number where your response is.
Page number 4, Chair.
Okay, you may proceed.
The management response is that an agreement was entered with the Controller of Budget in relation to the payment of long-term payables. The county government is strictly adhering to the payment plan, and a good number of the said bills have since been paid, and a few outstanding bills will be cleared in due course. And there is attached is the creditors' movement schedule and the payment plan, which is annex number 3.
Auditor General.
Next 3.
Thank you, Chair. The issue is still not addressed since there are no documents which have been provided to confirm payment of the amount and the balance as at to date. So the dates are still long outstanding.
Governor, you've heard what the auditor said. What's your response before the senators put in the questions?
Chair, if you look at the Annex 3, we have a payment plan, and we are adhering to the payment plan as agreed with the controller.
Now, maybe let's just look at Note 32, which has been referred to by the Auditor General. So Note 32, already we're starting off with a problem because the 782 million does not tie with the movement in payables for the year under Note 40. So already we have a problem. Secondly, Governor, if your movement in payables for the year was 500 million, shouldn't there be a relationship between that figure and debt under 1 year? Shouldn't there be a relationship, some casual relationship between those two figures?
Yes, Chair, just allow me to ask the CZ to shed light on that.
Yes?
Thank you, Chair, through the Governor. Your first question, Chair, was the figure we're looking at here. This relates to a schedule we filed last with the Control of Budget as at 31st of March 2026. The reported payables are as at 30th June, year end. That is why you may not see figure for figure tying the two schedules. Number two, your question is whether there is a relationship between what we are paying, what we're showing as paying, and the movement on the statement of cash flow. The answer is yes. When you look at that note, that Annex 3, you realize that the total development bills paid.
Because I can't see it.
I think you got me, you didn't get me exactly. Maybe let me rephrase. I was not making reference to your annexure. I was making reference to Note 32 of the financial statement, because we are yet to internalize that annexure. I was asking for the relationship in the movements in payables under Note 40 and the schedule that you have here already. Of course, you had already discussed, and you have already, you are saying there's some 280-something million you're going to explain. But if your increase in payables for that year was 500 million, then shouldn't your debt under 1 year relate to that 500 million?
So, Chair, just refer me to where you're making reference to the debt under 1 year under the annex?
No. Note 32 of your financial statements, where you have said your debt under 1 year is 335 million.
Yes.
And then in the other, in Note 40, the increase in payables was 500 million. So I'm asking, should the two talk to each other again?
They should, Chair. Let me just highlight one problem where we do aging manually as opposed to an aging where we would actually be driving an aging analysis from a system. So when you're tallying, when you're doing this aging analysis, we're actually relying on manual compilation of the outstanding debts as opposed to something that a system would generate. And that problem for us has persisted for long, that we've decided that we really need to just set in place the system, and we have our technical guys doing a system that will be able to really give us figures that are accurate, as opposed to relying on manual, which is prone to a lot of errors and casting differences.
You know, you are cleverly defining a solution without owning up to the problem.
Yes, Chair. That on the disclosure Note 32, yes, that figure ought to represent the 504, which is a change in the year. Thank you.
So now, you see, now when you look at that Note 32, Governor, that's why I was saying that that first issue was so material. It will determine whether we are able to make progress or not. Your officer has even said that the aging might not be as accurate as it ought to be. But if it was a few millions difference, that would be fair. The difference is almost between 500 million and 335 million. Secondly, employee payables. Can you tell us, as a matter of fact, that Nandi does not owe anything to employees, be it pensions, be it statutory deductions? I know in the prior year there was an issue of non-remittance of statutory deductions. Can you, Governor, having taken the oath, tell us, as a matter of fact, that the way you reported employee payables to be zero, that is the real situation. That you don't owe anything, even pensions, even defunct authorities, etc.
That can't be true.
But
We definitely do.
But you have reported zero here. You see, we don't know anything. We can be blind. We can not know anything about Nandi. I don't know whether Senator Maruma has gone to Nandi. But by looking at your financial statements, we should be able to understand Nandi. Your financial statements are not giving us a proper picture of Nandi. And if ISPAC was here, we would have told them to go with their members for disciplinary proceedings. So how then will you pay that debt if it exists and it has not been brought into the financial statement?
So, through the chair, through the governor chair, it is true that we have a debt to employees. The latest being even a statement we got from the county pension fund and the other local authority. There are usually two. However, Chair, the reason we've not been able to disclose and rather we've lumped everything under the 782 was we've had a reconciliation issue. It's been back and forth, but proper disclosure will require that once we are clear with what exactly is owed to KRA, what is owed to the pension fund, we break down that 782 million and not report it as a lump sum figure. Thank you, Chair.
Are you saying that because you're not able to reconcile, then you put the whole pending bills as trade payables? Why can't you disaggregate and have trade payables, maybe 500 million, and the rest as employee payables, even with that contested figure, other than lumping them together?
Thank you, Chair. On the face of the financial statements, it's under a line called trade and other payables. So the note might be a bit misleading, but on page 35, it is recorded as trade and other payables. So in a sense, it captures everything without necessarily committing to a figure that we are still in the process of reconciling. Thank you.
Chair, maybe is the county running away from their own financial statements? Because if you look at note number 32, Governor, the segregation is provided, but you have negated everything, number one. But when you go to note number 9, you have disclosed your employment costs, employee costs, which should have appeared in employment payables. So the question, because Chair, the question is looking at the Annex 3 of the Governor. He is indicating that a summary of pending bill status, as he says, as of this 2026, you have had recurrent bills paid. He has paid development bills paid is 397,659,81. In your own document, recurrent bills paid 160,446,817.25. The total, as per your next that you have paid, is 558,097,798. My question is, Chair, how sure are we with this credit movement schedule payment plan, which is a one paper without an attached schedule, to indicate the entities that have been paid, who are these, whether there is payment of multi-year projects that is ongoing, and on the recurrent bills being paid, does it resolve the aspect of unresolved prior year matters where this matter was disclosed? So, Governor, that would be my question 1. Question 2, Chair, even if you look at note 32 and note 32 and note 40, they are not speaking to each other. It's like Jesus Christ and the Satan. So my question is, this astronomical increase, Governor, now Chair, I don't know, maybe you'll guide me with this. This growth of year under 1 year in segregation and aging analysis is 335,126,950. So, Governor, which one should we take? Is it on note number 40 or 504,314,600? I don't know which number will work with Chair. I don't know, maybe you'll guide. So why that substantial growth within 1 year? Because, Chair, it can go back to the manufacture of 278 million that was manufactured in the first issue. Because this movement of pending bills, you know, this payment, there is an increment. Because it's 48% as per the analysis, aging analysis chart that has been provided in note number 32 and also in note 40. And the growth, of course, of over 3 years, 2 to 3 years, 1 year. Give us the perspective, because we know pending bill is a very sensitive issue, Chair. You know, counties globally, the 47 counties, Chair, they owe our contractors, suppliers, and servicemen and women almost over 180 billion. So why this astronomical growth in the global pending bill that you have, or trade payables? And what is the nexus between note number 32 in the growth of 335 million and 504 million between note number 32 and number 40? So which one should we take it home, Chair? I yield back.
Thank you.
So that,
Senator Marum?
yeah, so that maybe the governor can answer to both. I've looked at your Annex 3, and I've seen a letter to the Control of Budget dated 23rd October 2025. Please guide us how this payment plan would lead us to paying 782 million, because it's a paper that you need guidance for us to follow. This document, that the one that you're referring to as payment plan, forwarded to the Control of Budget, how would it guide us to how you will pay 782,535,628 from this plan? Please just guide us.
Okay, Governor.
Thank you. Through the Governor Chair, is that we filed this document to the Control of Budget as at 23rd October 2025. In filing, the advice that we have from the Control of Budget is that it is prudent to start paying from the oldest debts first, going to the newest. At this point, by the time we were talking of 23rd October, we had already, the pending bills had increased from the 782, which was as at end of the financial year, which was June, to 992 million, which was around the same October. So the filing was as at current period as that October. So when you see the schedule attached with the letter, it requires that we show per department what is owed. So you can see the 13 entities showing that in quarter 1, this is the amount that we paid. Quarter 2, this is the amount to be paid. So the 226 million was quarter 1, all the way to quarter 4 for development, and also for recurrent, quarter 1 to quarter 4. So the requirement is for both recurrent and development, you show different schedules. Every time before requisition, we then are required to confirm that we adhered to what we wrote and committed ourselves to, and that has always been the basis of the approval of the requisitions. So in essence, then the 992, the 782 is inside the 992 million. Thank you, Chair.
Chair, where did you get 992? I have 993. Or this is another document I'm having. The one you are having, the creditors movement.
You see, members, one thing we must agree on is that if the financial statements are not accurate, then we are not going to make any headway in this conversation. And there have been various admissions by the county of things that they ought to have done that they are going to do, things that they could have done if they had better technologies. And maybe to put it in context, because we also need to go to another issue which will demonstrate the same problem, is that this year, Governor, you had 7.813 billion in terms of receipts. And you have reported here 782 million as trade and other payables. Having looked at other counties, it's not bad, it's not alarming, because there was a county that was here with 4.5 billion as trade and other payables, because that's about 10% of your total receipts. However, we cannot vouch for the authenticity of that number, because as you have admitted, opening balances were not disclosed. As you have admitted, the aging is incorrect. As you have admitted, you did not disclose things like staff payables. It appears as if the county does not understand what it owes suppliers and staff. So I would have been very happy to congratulate you for having some of the lowest debt to revenue ratios. But we can't get there. We can't get there when your own team is the one that is poking holes into the numbers. So, members, I don't know whether you want us to ask questions on the basis of a note and a figure that the entity itself has discredited. Because you have discredited it. That's why you have said you're going to make adjustments in the next financial year. That's why you have said you need better technologies to age. So even if you ask you questions around aging, already you have admitted that you have done the wrong thing. So members, from that perspective, how do we prosecute this matter? Because it, you have incorrectly prepared financial statements.
Chair, and therefore, even the people who prepared financial statements before sign-off, they must have delegated their duty. Because if the governor is alluding to not owning up per se the financial statement, then it goes back to the people who've prepared. And I think this is what we call professional negligence that must be handled. So even as we look at the authenticity of the trade payables, the pending bills, so that Kenyans can understand easily, the people who prepared the financial statement committed a serious cardinal sin by not disclosing the true position. Because if we were not very keen, Governor, we would not have noted these discrepancies that we are noting with financial statements. So, Chair, I think even as we look at OAG looks, because I had also asked the Governor about the schedule of the payment of these 558,097,798 in attaching to show that movement or payment. And also the CC has said that they paid all the pending bills. So we can't see here. So it is hard even to know who was paid then, how much was owed. So, Chair, as you ordered the variance that we noted in 278 million plus, and on this one, the movement between not 32 and not 40. So also the people who prepared, Senator Kata is distracting me, there is Gusia here and Gusia there. I don't know whether they are related, the Ngusia, the OAG, and the Ngusia or Sergeant Atans. But the Chair, just in noting in your ruling, you must refer the people who prepared this financial statement to ISPAC. They must be held accountable for making what we call a year one accounting error. Chair, I yield back.
I think to avoid any fear or any perception that there could be mischief on the part of the Senate, I want us to contextualize the problem that Senator Cherargei is describing, again, by looking at how you handled deposits and prepayments. Because once we get that picture, we'll be able to take a view on whether these are financial statements that can be relied on. So, Auditor General.
Chair, before we go there, maybe just one short observation.
Yes.
And this could also be to the auditor and the entity. When we are aging, I'm very uncomfortable with this type of aging. You know, the aging analysis. Trade and other payables under 1 year, then 1 to 2 years, then to 2 to 3 years. I've always been uncomfortable as a student of mathematics. I think maybe moving forward, we might want to just write in terms of months. So when you're aging, you say under 12 months. And then the next row would be maybe 13 months to 24 months. And then the other column would be 25 months maybe to 36 months. Because if you say 1 to 2 years in one row, then 2 to 3 years, how do you then disaggregate the 2 years up here and 2 years down here? You know, so that you can get the figures. I've always had a problem of this type of aging analysis. Maybe we need to change and start using months. Below 12 months, maybe 12 months to 24 months. Then the next one would be 25 months to 36 months. Then maybe over 36 months. Otherwise, this type of stuff, even for mathematics students, this is just wrong. I thought I should make that observation.
Yeah, auditor, you can always guide the entity, and maybe this should come from National Treasury, really, because they're the ones who issue the, the standards and templates, guidance on aging, so that it is factual. And then I take note of what the CEC was saying, that they're aging manually. I don't know what you mean by aging manually, but I believe this is something that even on Excel can do this. Excel can get you a proper aging, unless you are sitting under a tree and distributing the papers in some grids drawn on the. I don't think that would be happening in Nandi. So there's a problem. There's a problem here, as explained by Senator Maruma. National Treasury offer the right guidance, and then Auditor General ensure that they do as required by the National Treasury.
Thank you, Honorable Chair. The Public Sector Accounting Standard Board is the one that's prescribed how these entries should be treated in the financial statements. And therefore, I would urge the county to adhere to that template, because it is very clear. Like now, for example, the opening balances, they were directed to have the opening balances as at 1st in July 2024. To pick the balances they closed the year with in June 2024 and carry them as the opening balances for that year. So you can see the template is blank. There is nothing that is put there. So I would urge the county to adhere to the template, and they will be able to minimize all these errors. Thank you, Chair.
Okay, that was an observation on the aging practice. Members, I want us to look at the next matter, which is explained in Note 33, so that we can take a view on the accuracy of these financial statements. And you'll still be free to ask questions that cross-cut from Note 32 to Note 33. Auditor General.
Thank you, Chair. I seek your guidance. Which paragraph, Chair?
The deposits and retentions.
Okay. Thank you, Chair. Unsupported fundable deposits and prepayments. The statement of financial position reflects nil balance in respect of refundable deposits and prepayments as disclosed in Note 33 to the financial statements. However, the supporting schedule reflects Kenya shillings 62,967,159 Kenya shillings, resulting in an reconciled variance of Kenya shillings 62,967,159 Kenya shillings. In addition, it was revealed that the county executive operated deposits and retention bank account at the Central Bank of Kenya with nil balance as disclosed in Note 21 to the financial statements. The account was intended to hold deposit monies for payment to various suppliers and contractors. However, the cash book and bank reconciliation statements for the account were not provided for audit verification. In the circumstances, the accuracy, completeness, and validity of the nil deposits and retentions balance reported in the financial statements could not be confirmed. Thank you, Chair.
Governor.
Chair, the nil balances arise from the fact that a significant portion of the retention monies was reported as part of the closing balances in the county revenue fund. A prior year adjustment will be undertaken to rectify this position, and appropriate measures have been instituted to ensure that the matter is accurately addressed going forward. Thank you, Chair.
Auditor General.
Thank you, Chair. The issue is still not addressed. The action proposed by management will be confirmed in the audit of the 2025-2026 financial statements. And the misstatement remains as it was as at 30th June 2025. Thank you, Chair.
Governor, we have the report of the County Revenue Fund here. Can you show us where that 62 million is accounted for? Yes, proceed.
Thank you, Chair. Through the Governor, is that this, as the explanation goes, is that we've not been, we've been leaving the retention money as part of the CRF balances, but you will not find it broken
take us
down.
to this is a CRF.
Yes.
This is a CRF, because today's meeting was to look at the three.
Yes.
So you have made reference to the CRF, and you are saying a significant portion of the retention monies was reported as part of the closing balances in the CRF account. This is a CRF report. Demonstrate to us where the 62 million is.
Yes, Chair. I'd wish to just make an explanation through the Governor on that.
Just make reference to the CRF, because the response makes reference to the CRF, so that we are dealing with facts. The Governor said it was reported in the CRF. If we find it in the CRF, well and good. We go to the next question.
Thank you, Chair. It's reported in the CRF, but not as a standalone figure of retentions. We've not separated in the CRF.
Where, in which line, on which page is it included?
So basically, Chair, any money that has gone through the CRF would then mean that it will be translated and paid to suppliers. Any balance that is in the CRF would include the retentions that really will be transmitted.
Okay, what is that global balance that includes the 62? You see, Governor, I think you must be concerned. It appears as if someone wrote for you this response. Of course, you'd rely on your technical people to do this response, which I understand. But they must also write responses that make sense. If you tell us the money was accounted for in the County Revenue Fund, this is a statement of the County Revenue Fund. Just show the Governor so that the Governor can show us where the 62 million is. Because in the report of the Auditor General, the Auditor General says you retained 62 million, but there was zero in the account, which means the 62 million was stolen. But if there is another explanation, show us.
Okay, Chair. So this has been the trend of activity. Initially, we used to maintain a retention account with the commercial bank. Courtesy of the advice from the Auditor General, it was advised that that has to be maintained with CBK. So we closed the retention account at the commercial bank, paid out all the retention monies. We opened a CBK special purpose account for purposes of retaining and transferring the money. The practice has been, since we opened, what ought to happen is that as we pay the supplier, we then transfer the retention money to the retention account. But we've had a mapping issue. So effectively, for the suppliers that we've been able to retain, we've only paid them 90%. 10% still remains unpaid. As soon as then we're able to fix the mapping, from our balances, what we receive from Exchequer, we'll still have to earmark and put it aside and transfer the whole amount, including the arrears, to that retention account so that we're able to pay.
I'm sorry, Governor. This committee is driven by facts. If there's a fact in the CRF, please point it out. If it's not there, then let's go to note 33. Because I thought we'd get some salvation there, but let's go to note 33. So, Governor, what have you reported as customer deposits, prepayments, and total deposits in your financial statements? Customer deposits?
It's not in the, it's
payments?
Nil.
Other deposits?
Nil.
Total deposits?
Nil.
Yet the Auditor General finds that there's 62 million that ought to be retained for suppliers. So where did the money go to if it was not reported?
Yeah, and in addition, retention money is contractors' money. It is their money. So if it is not there, it was probably stolen or misappropriated. Because even looking at Governor, in addition to what you have asked, even looking at note number 21 and 21A on detail, even on special purpose account that the CCM Governor is alluding to, does not add up. And I thought OAG, the retention and deposits account should maintain on its own because it is the contractor's money. Can I take retention money and give it to the employee cost as per the law? Then the procedure of reallocation under the PMF Act, Chair, even if the governor was to tell us he reallocated, then there must be legal procedure of that movement. So this 62 million, even if you look at note number 21, 21A, and you look at note number 33, which has reflected zero, this money cannot be traced, Chair. This 62 million.
My work is easy because I use ClickUp. Here's how I keep track of all my tasks. I start by brain dumping everything I need to get done in a list view. Next, I set a priority and a due date to keep things on track. I create custom statuses to organize my progress exactly how I want it. I like to add the action items field so AI can show me the next steps. I add my teammates as watchers so they're in the loop. ClickUp makes work easy, from personal projects to running a multi-billion-dollar company. Click the link below to create your workspace for free.
It's back to the initial disclosure of financial statements.
Okay, I want to hear from the National Treasury because they've given us guidance on this matter in the past.
Thank you, Honorable Chair. Probably I'll begin by educating how the deposit money is handled. Because at the point of pay, the contractor or the supplier they are entitled to that deposit, probably the way it was defined in the contract. That is, at that point of payment, that is when you feed in the IFUNIS the percentage that should be paid. And then you pay the contractor account, and the 10% retention you pay to the deposit account. Then update the deposit rate so that when that contractor will come seeking for their money, because actually it's not the account is money for that part that contractor, you'll be able to pay using the range of kept because it is indicating we have paid this amount of money from XYZ. But now the way the situation is here is like there is no visibility. There is no visibility. I'm even wondering when that contractor will come, how to be able to know what is the percent for that contractor sales.
You have heard the concerns from members of the National Treasury. You have correctly read your statement. There is zero, but the auditor has found this. How do we? What is your view? I know in the 11th Parliament we are within the Senate. So assuming you are sitting where I'm sitting, what would you make of this?
I think, Chair, I would probably be exactly in the same position where you are, where it's clear, you are not able to make that clarity. But I think the explanation that has been given by our CEC explains that when we opened the retention account at the central bank, we had a mapping issue. It wasn't, we were not able to operationalize the account at that time. But the fact that we did not operationalize that account at that time did not mean that the retention money was the retention was being retained within the CRF, so that the contractor was being paid is 90%. The 10% retention was, still remained within the county, and when the time comes for the contractor to be paid, pending sorting out the mapping issues in the central bank account, then we just budget for it and the contractor is paid. Of course, it's clear, for every contract, it is the percentage for retention is known, so it can't be chaos because it's known that this was the amount of the contract. He was paid 90%, 10% is outstanding. So that is really the case. And not just unique in this particular case. Even previously, when we had a huge struggle with disbursements, Chair, sometimes if you are driven by the reason to pay contractors, if you get whatever amount that you have gotten, and this retention might still be needed even as you put in the account, this retention will be needed in 2, 3 or so months, depending on the period that will be needed. So if you do not have all the resources at that time, some cash flow management situation that practically we find ourselves in is you pay the contractor is 90%, as and all the other contractors, sometimes you actually are not able to save enough to directly transfer to the retention account at that particular time. But since you know that this amount will not be needed for the next at least 2 or 3 months, you can still pay the contractors as you wait for the resources to come. And when the resources come, you are able to set aside that amount. It may not be the right thing to do, but sometimes it's a practical way of dealing with cash flow challenges that we have had. So, Chair, if you then would give us the opportunity to, together with even the schedule for the 270, because I think there are quite a number of outstanding, clarifications that we have to make on this particular audit query and the two previous ones.
Excel sheet, which the OAG extracted this information.
No. At this point, Governor, and I think when you explain it for very long, it means that even you
So I
words, on the go. Are you satisfied with that explanation, particularly the one on? Is that the explanation that we should take, that we should go back to the county revenue fund?
Yes.
But I have shown you the county revenue fund statement so that you can show us where the numbers are, and you've not been able to.
On the flip side, Chair, because the schedule of those who are supposed to be paid is there, adding up to 62 million or 9. That schedule is there. But then we are trying to locate the money in the accounts. That money is not there. So then how do you intend to pay if you are to take the governor's explanation? If the suppliers, the contractors come for their deposits, how do you intend to pay? In the current budget, do you have maybe a budget line for this 62 million? Because from the records, it's not there. It's not in the accounts. So how do you intend to pay that?
But also let's remember that money is retained and money is already approved by the control of budget.
Correct.
Control of budget, is that the case?
Yeah, that is very true.
So you can't come back again with a fresh requisition?
No, it is in addition what money that is statutorily deducted from the employees and is supposed to be given to pension schemes or any other form of statutory deduction is the money that has already gone out and has been approved by the COP. Just like retention money, and that is why I was saying this contractors' money. So when you go and employ it back, either through reallocation or that movement, then it is already unprocedural and illegal. So you cannot budget again, Governor, for something that has already there.
And then again, reallocations can happen in
HRIS as opposed to the exact details, but it's something that we can actually provide
Yeah,
with
yeah,
ease.
Governor, let's be clear. The auditor has their time for audit.
Yeah.
And it's statutory. I think, did we change the law so that it starts earlier than September?
Yes, there's a treasury circular that requires that financial statement be submitted by 31st August so that we start on 1st September.
1st of September. So from 1st of September to 31st of December, it is a time for the auditor to do the audit. After that, the Constitution requires them to bring the reports to Parliament. So now it is for this, to the satisfaction of Parliament, not the satisfaction of the Auditor General. So I think this is a matter that we cannot resolve on the face of it. Yeah. And members, since we have so many issues that still require further explanation, I think today we have stretched quite a bit. In our next engagement, we'll make sure we start much earlier so that we don't leave any matter hanging.
Maybe on the 155 million, 541,525, I thought it is important that the governor brings the evidence that totals to this.
Yes.
So that the fact that the rationalization of 3.3 billion, so that we don't go back to where individuals who are not supposed to be on payroll, like ghost workers or people who do not work, or the cleanup. Governor, because you had indicated you did cleanup of the payroll system, but the fact that in the payroll, there is still people who are paid through manually, and we know manual is prone to abuse. So can you dissuade us? And I think, Chair, as you rule on this matter of we hold it there, I think the issue of 155 million should and must be addressed and accounted for the way they have done in other aspects where we needed that has not been resolved. And I think, Chair, if you look even at prior year matters, sorry for taking back, this matter still recurs in the previous financial years that has been captured. And Governor, we did advise the OAG to be capturing prior year matters so that it is easy to track. So, Chair, I yield back, Chair, on the, because I know the meeting will be suspended shortly, is if on the issue of projects, I tend to agree with you that you can come to Nandi. We'll welcome you warmly. We see most of these projects so that when we are querying the projects, we are on site. I think it is easier that way rather than sitting here in the committee. So please feel welcome so that we can see some of these projects. And I can assure you, after doing a good job, you will not miss Mursik after the entire process. Chair, I yield.
Thank you. You brought me to where I wanted us to be, to discuss and to give directions that the unresolved prior year matters that are listed as Appendix 1 in this auditor's report, they also require your response. Because, Auditor, did we get responses on Appendix 1 from the entity?
Chairman, we did not get a response. The Office of the Auditor General wrote to the entity on the 22nd of January 2026, and the letter was received. That letter was documenting a total of 57 recommendations which this committee had made. Again, we did a reminder on the 23rd of March 2026, and the letter was received. That letter was copied to the County Assembly, to the CEC Finance, and to the Office of the County Governor. But, Chairman, we don't have a response to those issues. Thank you.
Okay, Governor, you've had correspondence direct from the Auditor General on the basis of resolutions of the Senate, not once but twice, but there's been no response. Are you aware of those correspondences?
Yes, I am, Chair. And we...
What is, because there are timelines, If the matters remain unresponded to, they'll keep populating your report. Because we are not, nothing will disappear from this report until and unless there is a resolution through the Office of the Auditor General and the Senate. Auditor, when did you require them to, what timelines did you give them to respond?
And we had given them 3 days from the date of that letter.
Now, Governor, you need to make sure that a response is provided, and if the auditor had given you 3 days then I think we might, we don't want to extend the time, but when we give you the notice for our next meeting, we hope, we will also be directing that you file your responses on prior year matters. Yeah, I think that's so that we don't set fresh timelines. Already the auditor gave you timelines which have lapsed. So prior to our next meeting, you will also provide a detailed response on the very many issues that are listed here. On HR, there were about 14 issues, almost 14 issues in just one department. There were things that the people of Nandi might wonder how they disappeared from the Senate. So, for example, the County Aggregation Industrial Park, it's a prior year matter, but it's also in the current year. Ineligible expenditure under Kenya Informal Settlement Improvement Project. I think there's KISIP queried and KDSP had also been queried. Then there were all these projects that you're doing, which made a lot of sense from agricultural value chain and value addition perspective, but there were delays in completion. For example, Avocado Aggregation Center, the Nandi Cooperative Creameries in Kabiet. I think there was a coffee mill project under the KDSP, and then there was delayed operationalization of Nandi County Textile and Apparel Unit. They sound, thematically, they sound like very, very good projects, but good projects poorly delivered is a bad project. So we will need to get your detailed responses on this, even though they were not part of the substantive issues in here. There were also hospitals. Kapsengere has been queried in this report. Mother and Child Hospital. There's also the issue of the governor's office building, where you have bought furniture before completing the building, like buying airtime before you get the phone. So we will need to find out what was the wisdom of doing that and whether it is prudence. I think those are some of the things that we should ensure do not get lost until they are completed, until they are delivered, and until there is value for money. With that, members, unless there is any other matter you want us to deal with.
Yeah, I think in the previous one on unconfirmed purchase of office furniture and general equipment, in the prior year, it was not unconfirmed. In this year, it was confirmed purchase, but the justification to buy it before the governor's headquarters is complete, because we want the next governor, be it me, to have an office work from. And you know, I'm used to how efficient offices are in Nairobi, so I want the best office in Kapsabet. Although I've seen my brother governor has been changing colors of paint, but I want him to fast track. I've seen he has put capros, fencing, but it needs to be finished before the next general election, which is less than 1 year.
You sound like you are an interested party in this particular subject.
Of course I should be, because I'm the protector of devolution, and one way is to have a functional, convenient, working office. Even for a governor, if he finishes now, before he leaves office, so be it, so that that efficiency can be improved for service delivery.
I think members, these are things that might require us to have boots on the ground. It would be nice for us to go just have a look, and I think I'm convinced that maybe our next interaction with the governor probably should not be Nairobi. It should be out there in Nandi, so that we go around these projects, all these agricultural projects, and see whether what is on paper is the same as what is on the ground. I think with that, we will, time will not allow us to go further. I will ask the governor if he has any matters in closing before we also make our closing remarks.
Chair, I think I would just join my senator in saying, I think, you know, visiting the ground and coming to see some of these projects makes a lot of sense. Again, a lot of progress has happened. A lot of those projects have actually been operationalized. I want to confirm to my senator, we should have declared conflict of interest on that matter a little bit, or interest that he hopes that he can be the next tenant in in the county headquarters, that I will have used it at least for
Governor,
6 months.
ambition cannot be conflict. It would only be conflicted if it was a service provider. Yeah, but
So,
proceed.
Yeah, I want to confirm to him that I hope that I will also be able to use that office. Actually, part of the office is being used now. I am sure in another 1 month or so I should be, and if you find favor in visiting our county, basically that is where we will receive you. But Chair, I have noted all the issues that have come up in this engagement, and I confirm and I want to commit to address and abide by the directions this committee will provide. Thank you, Chair.
In the interest of time, we will donate our time to Senator Chirarge for the closing remarks.
Chair, maybe just in closing is that those issues that we have flagged, I hope it can be addressed once and for all, so that my prayer, Chair, has been always every entity or every governor in office should ensure that they finish what they are doing, so that when the next session comes, it will be easy to manage. And Governor, you have to agree with me that at least everybody should finish what they are doing, so that when another regime comes, we don't want to see what you are trying to allude yesterday in Kabuliot in Moiben sub-county. Secondly, Chair, you have noted in terms of materiality, this, I have been tallying the amount that remain variant and unresolved. It comes to almost over 1.6 billion. These issues, and I know we would have gone even to the legal expenditure, contingent liabilities, the issue of pending bills, the issue of retention money, the issue of variance in employees and what have you. We really want to ensure that this 1.6 billion plus will be resolved and ensure that the people of Nandi can pinpoint. On the issue of projects, I agree that when we visit, Chair, we can create a circuit, because like Kapsengera is next to Vihiga and Kisumu. We can do within Kapsabet town, just to sample a view, even defined, if we can do it with Wazingishu, Chepteroi sub-county, when we are doing the Wazingishu, because that is near, Chair, and a number of other projects, it would be very important, including the one we have alluded to, Kapsabet County Referral Hospital. We were with the Committee of Health, and then, but we were looking at the services that is provided by county, but it's important that we can visit some of these projects. So I believe, Chair, that let us go on the ground and look at some of these projects, be it the ECD, be it the health sector, Chair, and many others. So Chair, I really want to see these things complete. And Governor, all these multi-year, this is your last year in office, these multi-year projects should and must be completed, so that we begin in a clean slate and give value for our people. If, personally, I don't have a problem, Chair, if Governor ensures that Chepteroi Sub-County Hospital Phase 3 is completed and functional, we say amen. If other projects within the county, Kapsengera and the rest, even I used to see is one, the Kobujai, where is local trading center, be completed and functional and people can access services, we want that to be completed. So, Chair, mine is just to say that, and hope to see you in Nandi. I know you are our neighbor. Hope to see you in Nandi, and if we can do most of these things, our people in Nandi will appreciate. And to welcome my brother Mo Fire. I know he has been fidgeting. You know, the reason today he has not been speaking is what he has been observing over the weekend. But I want to assure him, and to assure Professor Kindiki, we are with him until end time. So maybe Governor has a different opinion, but we will cross that bridge when we reach there. Chair, with those many remarks, allow me to rest there and yield back them.
Thank you, Senator. I think just to conclude it, we were not able to deal with issues on the receiver of revenue, even though the brief we got earlier from the Parliamentary Budget Office also shows that there is a problem there. When you look at certain revenue streams, like land rates are reducing, parking fees is reducing significantly, market fees, property rent, such that the 771 million that Nandi collected, were it not for hospital fees of 385 million, then perhaps the performance of Nandi from a revenue perspective would be described to be much below average. But we shall have this discussion when we come down to Nandi and also deal with the other projects. And I hope by that time, the issues of financial reporting, misrepresentation and misstatement, we hope that that will not recur in the audit cycle that is beginning now. For the professionals, please, please take your jobs a bit seriously, because the politicians, the governors will come and go. It's just the other day that Senator Sang became Governor Sang, and it's now 10 years. But as a professional, you should make sure that you offer a service that can transcend the political leadership. And you can only do that if you demonstrate utmost competence. I think keeping books in a county government, once you've got the CPA certification, should not be a challenge. And I'm looking forward to a future where we will be crying when you get a qualified opinion, you feel like hanging yourself. Because that's how it is in the private sector. You're supposed to have an unqualified opinion. A qualified opinion is not a badge of honor. It is an indicator that as a professional, you are falling short in certain areas. So in as much as we will push the governors as the CEOs, we will not hesitate to assign professional and individual culpability and responsibility to the professionals who fail to measure up to the standards. With that, we come to the end of today's session. This meeting is adjourned. We meet tomorrow at 9. At
9, okay. 9 is okay.
Yeah, by notice, as you will notify us.
Yes, Chair.
Thank you. We wish you a safe journey back to Nandi.